My name is M.R. Raghu. I head the research for a Kuwait investment bank called Marcus, Kuwait Financial Center, and which is also an asset management firm. I've been a keen follower of the regional economy, and I've come to this region in 1998. I worked in Riyadh, I worked in Bahrain, and now for the last 10 years I'm in Kuwait. So obviously things that happen here interest me a lot.
You've been working in this part of the world for many years. Again, I'm not entirely convinced that we're seeing a fundamental breakdown in the consensus. I think there's a lot more rhetoric than reality. How do you feel about that contention? Do you feel that there is a genuine change in the way that the global economy is going to work, or is it so deeply embedded in the way that companies and governments function that unpicking it is going to be a lot harder than some of the new leaders that we have in the West think?
Yeah, geopolitics is always a very fascinating subject, and it only gets worse year after year, making the life of analysts very difficult, definitely. At a global level, probably the most important thing to worry today is the US posture. You know, that's a big black box as far as all of us are concerned. And then you have, at a regional level, people are trying to, the control aspect of certain things, hegemony. And at a state level, probably you have this political and economic inequality rising. So this probably makes it as the underpinning. But if I reflect on GCC particularly, or the Arab world, back when the Arab Spring started, that's when the geopolitical tensions were very high here. We were fortunate enough not to have too many global geopolitical risks. But today, if you look at it, we are surrounded by global geopolitical risks, starting from US to Europe to Asia. So it's getting really tough and hard for us, you know, if you look at it from that point of view.
Okay, well, I'm going to pick you up on this, because this is, again, an area I know of your expertise. When you say you're surrounded by geopolitical risks, okay, I accept that contention. What does that mean from an economics, from a finance, from a business point of view? Where are we going to see the transmission of those risks into what effectively is some form of price, demand, or supply movement? How is it going to? And I'm not saying what is going to happen, but how could it manifest itself?
Yeah, very simply put, this is going to increase the risk premium, you know, demanded by the investors, and it is coming at a very wrong time. Why I'm saying this is because this is the time when the region is looking to attract capital and talent to pursue their economic diversification strategies. And any increase in risk premium is going to be really tough in terms of project viability. I think that's a direct connect, number one. And number two, a very heightened geopolitical environment, both globally and regionally, is going to seriously impact oil prices. And I don't think oil price is an economic thing. It's oil countries rise and fall because of oil prices. So oil prices define the political strategies that countries are following. And that is going to be extremely crucial for us in terms of managing the volatility in oil price, because volatility in oil price creates huge distortion in fiscal management for us.
Okay, we're definitely going to come back to that. Raghu, let's go to you on oil. Do you view that this is sustainable, and does Markaz have a trading range as it sees oil at in the next 12 months?
We don't give any forecast for oil price, but one thing that amazes me as an analyst or as an observer in the region for a very long time is the near unanimous view of almost all forecasters about a very stable oil price at about $40 to $50 for the next few years. I doubt that's going to happen because oil is a commodity, and commodity as an asset class is a very volatile asset class. And within commodity, oil is even more volatile. Most of the commodities have a demand-supply influence on price, but for oil, you not only have demand and supply, but you also have geopolitical maneuvers that will affect the oil prices. So I don't think oil is going to behave at about $40 to $50 for a foreseeable future to come, but this is the take generally I see across the board from Goldman Sachs to IMF to all of them, actually. Now, the point here is that last 10 years, we have had a good surplus situation. We built about reserves of $1.5 trillion between 2004 and 2015, what I call as the golden period for GCC. And then if you go into the future, we are talking about a deficit of $600 billion. So that's going to put a lot of pressure on the financial planners, and oil price is definitely central to that pressure, actually. So if everyone takes $50 as the assumed price and then makes the calculation, I think they'll be really caught on the wrong side, in my view.
Okay. Raghu, how do you see these geopolitical trends playing out in economic and practical terms in the GCC?
I don't see this as a make or break point for GCC, definitely. We have to understand that from an energy consumption point of view, the world is still a fossil fuel world. 80% of the energy consumption happens on the fossil fuel side. We have 20% renewable energy. Technology applications on renewables have been going on for decades. It's an elephant that moves slowly, in my view. So long as the fossil fuel dependence on energy consumption remains, say, at an elevated level of 80%, and even if this 80%, say, comes down to 60%, we still have a huge market to supply. Okay, this is number one. Number two is that U.S. political engagement in the region. Under Obama administration, I think it was a withdrawal, but in a very phased manner. So it was, earlier they were completely involved, engaged with almost all the actors here. And then Obama came and slowly disengaged himself. And finally, the parting shot was the Iran nuclear deal. Okay, Iran has been a sore point for many countries here, and then they came back to the market thanks to Obama. So now comes Trump, who probably, in my view, will disengage even further from the region. Now, if that happens, then the political risk premium around the oil-producing countries and the Arab world will increase, and therefore that risk premium will have to be priced into oil at some point of time. So basically, it's not end of the world for oil as far as I'm concerned. So what that means is that GCC governments do have time on their hand to really play out a diversification strategy. I don't think diversification happens just because you want it to happen. There are a lot of things that has to be put in place before diversification can happen. We have been talking about diversification for 30 years now without any success. We are still dependent on oil revenues to the extent of 90% of our budget. Now, we talked about expenditure management. I don't think expenditure management is also that easy, given the expenditure structure of GCC governments. 90% of our expenditure are current expenditure. And when you say current expenditure, they're nothing but salaries and subsidies. And if you examine the structure of why so much money is being paid in the form of salaries, That's because the governments have to absorb new entrants to the labor market in the public sector system. So if they can't just stop that process of absorbing new entrants to the labor market, so it will be a hard game to really control or reduce expenses. And then the contentious issue of subsidies. Subsidy is always, in a welfare economy, it's a form of wealth distribution, so more than efficient pricing of services. So if you look at it from that point of view, it will also be a very difficult 2 steps forward and 1 step backward type of a move in terms of subsidy management. So howsoever hard you try, there will be serious limits to how much expenditure you can manage. And then on the income side, you will have to be facing heavy volatility. So that really shapes up the thing. But do we have time on hand to really think and bring innovation into the system? I believe so.
Okay. That, could you please join me in thanking our workshop participants? So thank you, gentlemen.